Welcome back to Degens Journal, your daily fix of raw, no BS crypto news. If you're a true Degen, you already know, when the world gets chaotic, we lean in, not out. Today, we've got 5 major headlines shaking up the crypto world. And trust me, you don't want to miss any of them. Headlines preview. Saylor hints at another massive Bitcoin buy right as tensions explode in the Middle East. Tether freezes over $12 million in USDT on Tron. What's going on behind the scenes? Bitcoin closes strong, and bulls are now eyeing $200K. Crypto funds see $1.9 billion in inflows. Institutions are clearly not backing down. And finally, Saylor meets with Pakistan's finance ministry. Is BTC about to go national? Let's break it all down. News 1. Saylor signals major BTC buy amid Israel-Iran tensions. Saylor is doing it again, and he's not waiting for the dust to settle. Just as tensions between Israel and Iran reach a boiling point, Saylor, co-founder and executive chairman of Strategy, formerly MicroStrategy, posted a Bitcoin chart with a not-so-subtle signal. Another massive BTC buy is coming. Let that sink in. While most investors are on the edge of their seats waiting to see how the markets react to possible escalation in the Middle East, Saylor is sending the opposite message. Uncertainty is the signal, not the risk. The markets could open in full panic mode Monday, especially after this weekend's developments. Traditionally, geopolitical instability sends capital rushing into safe assets like gold or the US dollar. But for Saylor, the safe haven is Bitcoin, and he's doubling down. His last BTC purchase, just days ago, 1,045 BTC, worth about $110 million, bringing Strategy's total to a jaw-dropping 582,000 Bitcoin. At today's prices, that stash is worth over $61 billion, with more than $20 billion in unrealized gains. That's not a typo, 20 billion in green. And remember, this isn't a crypto hedge fund or a mining company, it's a software firm turned Bitcoin whale. And now, Saylor's hinting at yet another buy, even as global risk flares up. Why? Because in his view, every crisis is fuel for the Bitcoin narrative. Governments print money in response to war. Central banks lose credibility. And Bitcoin, with its fixed supply and decentralized nature, becomes the obvious alternative. Here's what this tells you if you're paying attention. Saylor isn't just trading charts. He's playing 4D chess front-running chaos and making Bitcoin a corporate treasury strategy on steroids. So here's your question for the comments. If you had Strategy's bankroll and a $20 billion cushion, would you keep stacking sats in this geopolitical storm, or would you wait it out? Let us know what your inner Degen says. News 2. Tether freezes $12.3 million in suspicious Tron wallets. Another week, another frozen wallet. Tether, issuer of the world's biggest stablecoin, USDT just froze $12.3 million worth of tokens on the Tron network. No official press release, no tweet. Just silence and a digital freeze at exactly 9:15 a.m. UTC on Sunday. What's behind the freeze? While no reason was given, it's likely tied to anti-money laundering, AML, concerns or wallets possibly linked to sanctioned entities. And that's not wild speculation back in March. Tether confirmed in a blog post that it enforces a wallet freezing policy in line with the OFAC SDN list, Office of Foreign Assets Control, specially designated nationals. Translation? If your wallet looks shady, sanctioned, or linked to blacklisted addresses, boom, it's frozen. This is not an isolated move. Tether has been doing this more frequently, and it's part of a growing pattern. Centralized stablecoins taking on regulatory gatekeeper roles in a space that was born to be decentralized. Here's the irony. USDT runs on blockchains like Tron and Ethereum, which are permissionless and censorship-resistant in theory. But the token itself? Still centrally controlled, and the issuer holds the kill switch. So this raises the bigger question. Are centralized stablecoins slowly turning into surveillance tools? Is this the price of playing nice with regulators and staying legit? Or is it the beginning of DeFi losing its soul? Drop your take in the comments. Is this necessary security or creeping control? News 3. BTC closes above $107K. Bull's not done yet. Bitcoin just shook off the war dip like it was nothing. After diving during the Israel-Iran headlines, BTC came back swinging. It closed the weekly candle above $104,500 and quickly pumped past $107,000 to kick off the new week. That's not just a bounce, that's a full-on flex. Let's break it down. Over 30 key indicators are still screaming, bull market not over. No blow off top, no mania phase, no signs of long-term distribution. Both whales and retail are holding tight. No panic selling, no exodus. And here's where it gets spicy. Perpetual futures are still trading at a discount to spot. That usually means traders are shorting or underexposed, and when the squeeze hits, it could be explosive. Some analysts are dusting off their old price targets again. Yes, $200. KBTC is officially back on the table in a few circles. One trader summed it up best. Closed the weekly over 104.5K. That's a good sign, just gotta hold. But here's what matters for us degenerates. Volatility is ramping up. Sentiment is getting greedy again. And BTC has momentum on its side. It's not a question of if we move, it's how violently. So here's the prompt for your alpha brains. Are we watching the calm before the next breakout? Or is this another fake-out trap? Get in the comments. Tell us where your conviction's at. News 4. Crypto funds see $1.9 billion in inflows as BTC rallies. The money is flowing, and not in drips and tidal waves. In just 1 week, crypto investment products saw $1.9 billion in inflows. That's not retail FOMO, that's institutional conviction. That brings the 9-week total to $12.9 billion, with $13.2 billion year-to-date, setting a new all-time record for crypto fund inflows. Let that number breathe. We're not even halfway through the year, and crypto has already topped its biggest capital inflow year ever. This isn't hype season, it's accumulation season. The surge is being led, unsurprisingly, by Bitcoin. BTC continues to act as the magnet for big money, and when Bitcoin moves, the rest of the market pays attention. But it's not just BTC. Even Ethereum woke up last week, briefly breaking $2,800, its highest point since February. Meanwhile, assets under management, AUM, in crypto exchange-traded products, ETPs, now sit at $179 billion globally, up from $175.9 billion just a week ago. These are not retail wallets, we're talking about pension funds, sovereign wealth funds, and asset managers parking serious capital into structured crypto vehicles. What's the signal here? Institutions are not trimming exposure, they're not taking profits, they're not hedging or de-risking. They're doubling down. And that tells you everything about how the smart money views the current cycle. War? They buy. Rate uncertainty? They buy. Bitcoin hits $100K plus. They still buy. So the question is, if the institutions are going this hard, what are you waiting for? Let us know if you're scaling in, sitting tight, or watching from the sidelines. News 5. Michael Saylor to advise Pakistan on national crypto adoption. Michael Saylor's not just stacking sats, he's exporting the Bitcoin standard. Over the weekend, Saylor met with Pakistan's Minister of Finance and their top blockchain officials to talk crypto strategy, not for trading or speculation, but for national-level adoption. Yep, you read that right. Saylor pitched Bitcoin as a state reserve asset similar to how nations stockpile gold or foreign currency. He suggested Pakistan could position itself as a crypto-forward nation, leading the charge in sovereign BTC integration. And guess what? Pakistan listened. In a video shared by government officials, Saylor praised the country's talent and said Pakistan has the opportunity to show intellectual leadership in the global crypto arena. His company, Strategy, formerly MicroStrategy, now holds a mind-blowing 582,000 BTC, valued at over $61 billion. That's more Bitcoin than any nation officially owns. And now, Saylor's offering to share his playbook. This could be a huge signal, not just for Pakistan, But for any emerging economy looking to break out of fiat dependency, for any government tired of currency devaluation, capital controls, and IMF handcuffs, what happens when Bitcoin stops being just an asset and starts being monetary policy? Because that's where we're heading. Fast. Would you trust your nation's reserves in Bitcoin instead of fiat? Hit the comments and let us know where you stand. That's a wrap for today. Degens. Which story shook you the most? Keyword for the comments: trust. Drop it below and tell us, would you trust Saylor to run your country's crypto policy? If you liked the video, smash that like button, subscribe to stay ahead of the curve, and turn on notifications so you never miss a pump or a dump. This is Degens Journal, where real alpha hits first. See you in the next one.